there has been a serious disconnect between the Nifty as well as the Nifty Bank all throughout this year. If you split the year into two halves, the first half where we saw the substantial market correction and the second half where we saw the market recovery. Let me just analyze this on three bases. One is the market performance, second is some of the technical parameters that market participants look at, and third is the technical analysis, gap analysis that I am referring to. Let me start off with the market performance. So if you have a look at the first half of the year that we've had this 2020, the maximum drawdown of the Nifty was as high as 40%, while the Nifty Bank fell a little more, as much as 50%. So it fell more than the Nifty itself. And then came the recovery that we've had in the market, and the Nifty has in fact retraced 61.8% or more of the entire fall that it had, while the Nifty Bank has been able to recover just about 38.2% of the entire fall. Even if you have a look at the recovery that has happened post March, the Nifty has recovered almost 50% from its 52-week low or the March low, while the Nifty Bank has recovered a little over just about 40% from the March low. So all in all, it suffices to say that the Nifty Bank has actually fallen more and recovered less. The second parameter or the technical factors that I am referring to, if you have a look at the chart basis, there are three key moving averages that market participants actually look at. One is the 50-day moving average, the 100-day moving average, and the 200-day moving average. Now the 50-day moving average is largely looked at short-term trend reversals, and the 200-day moving average is actually looked at for a longer-term direction. For the Nifty, it is trading above all of these three key moving averages, which means that the trend has definitely shifted on the upside. But for the Nifty Bank, while it has managed to reclaim the 50-day and the 100-day moving average, it is yet to conquer the 200-day moving average once again on the upside. So till that is there, not taken out, the Nifty Bank could actually be under some bit of pressure. Now interestingly, what I observed on the charts of Nifty as well as Nifty Bank, during the fall of Jan to March that we saw, there were 5 gaps that were actually created on the way down. For the Nifty, 3 of those gaps still remain open, while 2 of them have been closed. And interestingly, all 5 gaps on the Nifty Bank chart are yet to be taken out. For instance, let me start off with the Nifty chart. 12,071, the gap is still open. 11,537, the gap is still open. 11,245, the gap is still open. Today the market actually attempted to go beyond that level, however it did face some bit of resistance, while 10,827 and 10,334, these 2 gaps have been filled on the Nifty chart. While for the Nifty Bank, 30,702, the gap is still open. 29,914, it's open. 28,536, that also remains open. 27,162, the gap is still open, and you have the last one, which is 26,234. And the interesting bit about this last number is that the 200-day moving average also coincides at a similar level. So it will be very interesting to see if the Nifty Bank can actually assume leadership and continue its way forward as well.